we had a slight gain on the bourse in today's session, NSE 20 gaining around 3.3 points for today. It seems that most investors are really waiting to see what the third quarter results hold in store for many of these companies, and also many are expecting some good numbers. Do you think that we could be left disappointed, or do you think it's the results have mostly been priced in?
I think the wider expectation is that most companies are likely to continue posting very strong earnings on the back, especially of an economy that is rising very, very sharply. Looking at the second quarter GDP figures, where growth was at 5.4%. So most of this is actually expected to translate into very, very robust numbers, especially for bank stocks.
Well, Isaac, just looking at today's trade, it seems that turnover was relatively light when it came to the shilling. Was this reflected in the equity markets as well?
Yes, we saw a lot of activity on the side of the Standard Newspaper Group, which is basically a media company. There was also a lot of activity on Carbaseed Investments, basically makers of gas that's used to carbonate soft drinks, and also housing finance, which has basically been on a rallying trend for the last couple of weeks. So by and large, this is expected to continue happening, but there were definitely more stocks that were on the up compared to the ones that were declining.
All right, just looking at the banking stocks, it seems that those mid-tier stocks seem to be undervalued at this point in time. Do you think that we'll be seeing more money flowing into those mid-tier banks?
Yeah, I think if you look at the multiples of the market in general and most stocks in particular, I think you'd probably say that the most stocks are fairly undervalued. So we actually expect more money to keep on going into equities, especially with the expectation of stronger performance moving forward.
Turning our attention to some news out today regarding Portland Cement and also Athi River Mining. It seems that many investors, foreign investors, are interested in these two companies. And of course, it seems that Chinese investors and Indian investors are looking at the cement industry as relatively lucrative in Kenya at this point in time. Do you expect foreign interest to start increasing in the infrastructure space at this point?
Precisely. I think you could probably look at it from the back of two developments. One is the expected spending on infrastructure projects by the government, and then another is also the expected growth of the housing construction by the private sector as well. So on the back of those developments, I think we should actually expect those shares to attract quite a lot of activity, and also possibly because of the promise that the promise of better gains to investors down the road.
Would you be buying these stocks on the back of the news? In other words, Portland Cement and Athi River Mining?
Definitely, definitely.
Isaac, also just touching on the Capital Markets Authority, we know that there's been a lot of news out on over-the-counter trading. It is set to increase the liquidity in the market. Do you think it's going to have the desired effects? Of course, many investors are concerned about the interest rate environment in the country and the fact that we're seeing a massive dichotomy between the market forces and, of course, the interest rates that are put forward by the central bank.
I think by and large, we should probably not expect, we should probably expect rates to continue falling, especially looking at the liquidity that's in the market. I mean, like last week, for instance, the 182-day Treasury bill was oversubscribed by 168%, where the central bank was looking for 7 billion, they ended up getting 11.8 billion. So then again, when you look at the interbank rate, it's dropped to a rate of about 0.92%. So by and large, I think those are indicators of a lot of liquidity, which I think is also still going to, it's still expected to continue pushing down rates on government paper down. So I think the moving of bond trading away from the NSE should probably not have a very significant effect in terms of direction of interest rates.
Let's touch on KenGen, because this company has come out with a very strong strategy looking at geothermal prospects and, of course, also nuclear by around 2022. Do you think that on the back of this news, there's a value add for the investor out there? We know that this stock has been battered, or hasn't been performing as well as some of the other energy stocks in Kenya.
Absolutely. I think that's basically a very, very brilliant strategy, especially when you look at the major source of their power. I think it's about, it's close to 70% is generated using hydro. And then again, of course, the key challenge with hydro is that it is mainly rain dependent. And of course, nobody can control the weather. So if you look at their earnings results that came out last week, they ended up reporting lower earnings by as much as 47%. And that was mainly attributed to drought that was there sometime last year. So if you move them away from a source of generating electricity that is not dependent on weather like nuclear, then definitely it would put them on a more stable path as far as earnings growth is concerned. So I think that is very, very welcome news. Of course, the key consideration again to consumers is the cost at which the new source will come at. Because I think currently one of the issues facing the market is high costs of electricity prices.
Exactly, and of course we know that KenGen has been losing market share to its peers. Many say that this is a very good strategy, but of course the pricing model is going to be a very big issue, and whether it can compete effectively against its competitors. How do you see that playing out, Isaac?
Sorry, yeah, please repeat the question. I think.
Well, just looking at whether KenGen can actually start competing effectively against its peers, purely because it has lost market share, and of course it comes at a cost, all these new strategies.
Yeah, I agree. I think if they look at alternative methods of generating electricity, especially away from hydro, and most importantly using diesel to generate thermal power, then definitely they should be able to recover their market share, because those two sources, especially looking at thermal, have proven, or rather have driven their costs of producing electricity higher, and in the same process as well, leading on to higher prices at the consumer level. So I think if they look at alternatives, then definitely their fortune should look up, especially when you bear in mind the fact that as the economy grows and as sectors continue expanding, then of course electricity will be a major requirement. So demand has always been higher than supply. So I think depending on the method they choose, it should definitely change their fortunes moving forward.